All right, I'm gonna go ahead and get started. Appreciate you guys jumping on. I know there was a few people that said they weren't able to make it, so asked me to record it. So I'm gonna go ahead and record it. We're doing our lead gen and mastermind this evening, and we have Rick Rall from Navigator Private Capital joining us tonight. So thank you very much, Rick.
Thank you. Appreciate the opportunity. Thanks for the invite. Looking forward to it.
Our mastermind this evening was going to be working with investors, getting into business with investors. We had about 4 new agents join the brokerage within the past month who work quite a bit, and our main focus is going to be Baltimore. And I know we've done work together before in other areas too as well. But we've got now quite a few of the agents who are working with investors. So I kind of wanted to break down some bullet points on it, and then just see it. If you're going to work with investors, one of the things is that they're going to want from you is for you to bird dog properties, find properties for them. They're going to want access to probably private money, where you come into, Rick, and you guys have a great company, great reputation there. Know the process. Have contractors, vetted contractors that they can recommend to their investor clients. Know the process and understand what a 1031 exchange is, and have some qualified intermediaries lined up for potential investors that are exchanging properties out. So probably nobody better to speak to the private money portion of it in the process than you. So I'll kind of let you take it away and tell people what you do and how you can help them get in business with investors, and how it can be a win-win.
Well, 1 second. Absolutely. You're very, very kind. We appreciate it very much. So little background about me, which I think will help you understand why we're doing this. So I owned a traditional mortgage company for 14 years. I hate to admit it, but I started with ITT Financial in 1994. So a long time ago, been in the mortgage business since then. Did a lot of FHA paper, did a lot of VA, Fannie, Freddie, USDA, all types of subprime. And I actually had FHA, which a lot of people did not do. Some of the larger shops did. But when the crash happened, we did a lot of 203K, and because there's a lot of bargains. So in 11, I actually shut down. It was May of 2011. I just wasn't having any fun. So we got out of it. And then Tim Board, he's also a realtor, a member of ACAR. And he and I had known each other for many, many years. He was with Ford Consumer Finance when I was with ITT. And we liked this space because we got to be creative. And a lot of what's happening in the A-paper world, which is essential, Fannie, Freddie, conventional, whether it's Home Possible or 203K or any other derivative of a conventional product, is very fit in the box. And it was primarily only for primary residences. There are some investment properties, but you can't be very creative. So in 2015, we got together, raised some capital, started this, and we've been rolling since then. We now do 39 states. Basically everything up to the Rockies is what we do. So we have the ability, to lend all the Eastern Seaboard up and down, and then out to basically Colorado. Is probably our line. The reason we don't go past that is those states require you to be licensed to have an NMLS, which I had for many years. I just don't operate in that world anymore. So we primarily started out with fix and flip. So buy a house, get the money to buy, get the money to renovate it, and fix it and then sell it. But now we also offer bridge loans, which is I'm buying a house and I need to get another house. One key component is we do not do any primary residence or second homes. Must be exclusively for investment purposes, business purpose loans. In addition to that, we also do new construction. We do a lot of that actually in Tennessee and Texas right now, Florida some. Multi-unit, so basically 50 to 100 units we can go up to. So big projects. I know you said Baltimore. We have quite a few 12, 14 units in Baltimore right now that we've lent on. And then the hottest thing in the marketplace now is rental property loans, where you're qualifying just on the asset and the income coming in. So it's called a debt service coverage loan. So if rents are, say, $1,000 a month and you're all on mortgage payments $1,000 a month, you qualify. None of our loans require tax returns, paycheck stubs. We do verify assets, but pretty much across the gamut. So that's kind of a general opening. What questions can I ask? What would you like me to cover for them?
Awesome. Yeah, no, appreciate that intro. So a couple things. Just want to touch on that. Rent to own market's so hot, right? It's super hot. And there's a big need for it. So cash on cash, helping clients figure out that if you guys are on the call, Google cash on cash and what that means on a return for the rent to hold property market. But that's huge. Didn't 100% realize you guys were doing that. So that's awesome. That's a great market.
So if you want, our website is gonavcap.com. So it's G as in George, O as in Oscar, N as in Nancy, A as in Adam, V as in Victor, C as in Charlie, A as in Adam, P as in Paul. You don't need to sign in, but we encourage you to sign up as a member. When you hover over loan programs, it gives you everything that we do. And you can get a quote, which is really like a quick and dirty. You can do this on anything that we do. One of the things I want to state is we built this entire system from soup to nuts. We have all the technology. Another key component about what we do that's different than you may hear some people advertise on local radio. This is our money. We don't say that to brag, but we work long and hard to put ourselves in this position. So there's not a middle person. We're not brokering anybody. If you come to us and it makes sense, we're going to do it. That said, we basically have boxes that you fit into for what we're looking to do. But for the rental property loans, it gives you everything we do. I mean, we have rates. You can get a rate, it says 4.25 now, but we just did one at 3.99. And that's for 30-year fixed, principal and interest, taxes, and insurance. Now, on that, there are qualifications. You have to have a lot of assets. That was a 740 score, and I think it was a 70% loan to value. But the average rates are running in the mid-4s, which is not far off conventional. Fannie and Freddie just came out and basically said they're going to have huge, what's called risk-based price adjustments to second homes and investment properties. So we're not far off.
Yeah. And I mean, the good thing about, even what you're knowing what your rates are, even if it's in the mid-4s, I mean, that market's all about just knowing the numbers, right? Cash on cash, plug in the numbers, you know what your rental rate roll is going to be. It either makes sense or it doesn't. Like you said, if it's, 70-30 in, you know what you're putting out up front, and you can kind of figure out what your cap rate's going to be or your cash on cash return. So if that sounds foreign to everybody, just hit me up and we'll kind of walk you through it. But I mean, that's really where, if you're going to take real estate investing to the next level, learn that shit. Because that's really, where you can make some money, build long-term wealth.
It really is. And not only, for your investors, but for yourself. So the 30-year fixed, you basically need a 660 score. And those rates are probably going to be mid to high 4s. But you can do 80% purchase, 80% cash out refi. There's obviously no mortgage insurance. It does include property taxes and homeowners insurance. You can get an interest-only payment. It's typically for a 5 or 10-year period, and then it adjusts to whatever's the remaining. It's not a balloon. But once you go below a 660, we go down to a 600. We offer a 5, 7, and 10-year ARM. And the reason for that is we don't hold this paper. We fund it with our own money. We bulk it, and we'll sell it out to equity funds, hedge funds. We're still the person who you look to for answers and things of that nature. You have a servicer you make your payments to. But it's a great product. I mean, you can get a 10-year fixed rate for someone who has a 602 credit score with a 20% down, and we can actually do no experience with those too. The market really has an appetite for it right now. I mean, one of the key components that I want to say here is, again, thank you for the opportunity, but we're not hard money. We are not in the loan to own business. We are genuinely concerned with meeting the needs of your client or you and making sure we can make that happen for them. If it's not going to happen or it's not a good deal, we're not going to do it. That's bad business. Whereas we have others in this marketplace that just say, yeah, they charge a bunch of fees and it doesn't work out. Our background is the conventional loans. We want to make sure we are doing deals that make sense. People will say you're hard money. So the only thing I have in common with hard money is I don't have to think like Bank of America. We're going to do deals that make sense for your clients.
So that leads me into my next point, Rick, and I appreciate that. And I'll talk to you like the process too. I mean, just sort of anecdotally, like I've used you guys before, the process was super smooth, very well thought out, and definitely felt like you guys were protecting the end user or the client, in that case, myself or our clients. So I can speak to the point that you guys have a good process in place, and it's probably only gotten better since then. But you bring up a good point, private money versus hard money. Just for the agents who are newer on the call or who are going to be getting the recording, explain why you guys are private money and the 1 year limitations to what you do and some of the things that are different between private money and in the traditional banking system.
Well, thank you for that compliment. And yes, we think we did a good job for you. It's nice to hear that from you, but we actually improved a lot. The process is a lot smoother. So on the website now, you can do what we call, forgive the use of euphemism, but quick and dirty, get a quote. I'm just thinking, what my client wants, let's just plug it in. What I would tell you to do for yourself and or for any client, if you sign up as a member, you do a pre-application. There's no credit pull. This is the deal. I'm doing a refinance or a purchase. This is how many deals that I have. Because experience is key with us. We'll do no experience. But the more deals you do, the more you know how to deal with contractors and permitting and all the things that you had to deal with the deal we did for you. You have a contractor who runs out on the job. How do you deal with that? It's very hard. It's very stressful. And we're here to help you with that. But you plug it in. It's a very quick, short app. And you can do a play one, 123 Main Street, and send it over to us. Sales will be giving you a call. We want to call within 20 to 30 minutes and say, Greg, Christy, Mike, Fanny, what are you looking for? And then send you a conditional approval. And that conditional approval has start to finish everything that you would need to get the deal done. And if you want to move forward, there's a link to do a full loan application. There's a link to upload your docs. There's a link to pay for your appraisal. And when documents come in, they are cleared, and then the system cycles and it's removed. For example, contract to sale. Another key component is we do not lend to individuals typically. We do have some states that will allow us to lend to an individual. We don't recommend that. These are business purpose loans, so primarily to LLCs, S corporations, C corporations. So it's a very simple process for us. What makes us different is there's no tax returns. I think that was your question. What's the differentiation between us and, say, Bank of America? Well, if you're doing an investment loan through Fannie or Freddie, you have to have a 2-year history of being a landlord, showing it on your taxes in order to use that income. Otherwise, you have to qualify entirely on your ability to carry the debt itself along with your other debts, which is stressful. We don't do that. Ours is, it doesn't make sense. If your rents are $1,200 a month on an investment property, and this would be through the rental loan, and your all-in mortgage payment is $1,000, principal, interest, taxes, and insurance, or you just do interest only and taxes and insurance, you have a difference between $1,000 it costs a month and $1,200 of what you're earning. It's called a 1.2 to 1 ratio. You qualify because you have revenue coming in for the property. We'll go down to a 1-to-1. We'd like you to be experienced to take that product, but we'll do it because there's an appetite in the marketplace for it. We just want to let you know if something breaks, you're going to have to pay for it out of pocket because you won't have revenue coming in to build up on it. But what makes us different is no tax returns, no paycheck stubs. We do run a background check because our loans are made to entities. So we don't want to see financial crimes, frauds. We will allow for some small medical judgments and liens. And people say, well, why? Well, I'm lending to an entity. I don't have tax returns. And if you have a history of legal problems, it's hard to make payments to us if you're in jail, put it frankly. So we do have the right to refuse on that regard. However, that's really one of the key differentiations. And the other thing is speed. And we typically can close in 2 to 3 weeks. I will tell you in today's marketplace, it is slowing down, so it's getting a little bit better, but I would say 3 to 4 weeks, and that would be because of appraisals and title. So another key differentiation, we talked about the rental loan, would be the fix and flip. These are for investment purposes only. So let's do easy numbers. You buy a house for 150 and you want to put $50,000 into it. That would be 150 plus the 50 would be your loan to cost, $200,000. If you don't have any experience, we'll do 85% of that. So you would need $30,000 into the deal as a down payment, plus your closing costs, plus enough money to start. And that's it. We don't play the gotcha game in this business. You know, if any of you applied for a loan recently and the rates have been great, it's very stressful. It's one item after another that they request. And it takes a long period of time. If we see a bank statement comes in and we see a $12,000 deposit, we're going to ask you, okay, where'd the money come from? I got it from grandma. I had it in the bank. I had it somewhere else. As long as it's reasonable, we're going to do it. If we see something that comes in on your bank statement that would put you financially in a financially stressed position, we're going to say, you know, is this really a smart thing? If I see $12,000 coming in from Big Louie's bail bonds as basically a floater loan to get you to closing, I won't tell you we're not going to do it, but we're really going to say why, because you're stressing your finances. So it's not the gotcha game. It's another big differentiation with us. We do allow for bankruptcies. We like to see seasoning for 2 years. And we want a reason. Not that I went to Vegas and I didn't want to come home and spend all my money, but, you know, I broke my leg. I couldn't work, whatever it is. It's just a reasonable test. So no tax returns, no paycheck stubs, timeliness, and does it make sense? And the other difference is no primary residences, no second homes.
Makes sense to me. And then did you originally say, was it's 70%, 70-30 loan to value on your after repair value?
No, actually, another thing that's changed in regards to when you did it, with no experience, you can go up to 85%. If you do have experience, which for us would be 2 or more deals, we even consider going 90-100. So in that case, where we use the example of 150,000 purchase and 50,000 into it, we would do, and you have to have, I believe, a 680 score on this one, where we would do 90% of the 150, which would be a 10% down payment, so $15,000, right? And then we would finance the 100% of the repairs. So we've gotten very aggressive in that regard. Experience is our biggest thing. I mean, experience. We'll live with lower credit scores, but experience really trumps all because you know how to get the deals done.
Sure.
And like everybody on this phone call, we're all self-employed. And sometimes you have to live on your credit and move stuff around just to make things work. You wait for a big payday, you pay it all off. That's reasonable. We live in the real world. We're not government workers who get a paycheck every 2 weeks. So experience and reserves are more important to us.
Yeah, I feel like it's kind of sort of old school, the way banks used to do business a little bit, you know, with a little bit more common sense.
The key to us is, frankly, common sense. And that's really what Tim and I, when we brought in Kevin, who developed our entire back end, looked at it was, let's do good business. We operate in spaces where the bank will not lend. You know, the key difference where it just makes sense. The numbers make sense. The risk makes sense. The reward is definitely there, but they're just not programmed to do it because there's no place in the secondary market, which is where all these banks sell all these loans, these hedge funds. There's not an appetite for that. There is, and what we do, because we do sell some of our loans out, we still service everything. But it's for a little bit more of a rate, not much. It's very reasonable. And, you know, it allows us to be creative. And that was the one thing, one of the biggest reasons I got out of my own business was I was just an order taker checking boxes. Nothing against those individuals who do paper, they do a great job, but that's not where I did that long enough.
Yeah, that makes total sense. So kind of just sort of to recap, like on the buy and hold strategy, I think the secret sauce is really understanding cash on cash and how that works and how the numbers align and rental screening. I mean, that's my personal opinion. You can tell me if I'm wrong on that. But on the buy and flip, I think the secret sauce is in understanding ARVs, after repair values, and really pricing up the repairs, doing a good price quote on what it's going to take to bring that property up to speed as far as fair market value goes. And that's a little bit of you have to work with some contractors that know what they're doing, experienced, trusted contractors, so you can get a good estimate of what the rehab costs are going to be, and then managing the contractors is obviously paramount.
It is, and a couple things there. And we have all these guidelines on our website, and I see Christy's asking questions. I want to answer that too. The scope of work is paramount, and we have examples of the scope of work. We have it, it comes over to you in your conditional approval. There's a link for it. You can do a PDF version, you can do a Google Sheet, you can do an Excel sheet, and it will tabulate the PDF one, but you put your numbers in, and it really is sequential. It's like a chronological order. So, what are the costs of the project? Well, first it's permits, right? And then it would be demo maybe, and then it might be heavy up, and it goes through, and there's a line as to what the cost would be for it. So it totals everything up. And one thing I will tell you is the cheapest guy or lady never is. They're not. The person who says they're going to do it for dirt cheap, less than market value, is usually in a jam and they're just trying to get the business, and they're going to take your money and use it somewhere else. So be very cautious if you're doing it for yourself. And we review every scope of work that comes in. We're not here to babysit individuals, but if the scope of work is a little bit light, we're going to say, okay, it's a little light. Can you explain why you're not doing HVAC? The house is 15 years old and doesn't look like it's been replaced. Well, I'm going to go in. I'm just doing some lipstick on the pig, paint, carpet, this and that. It's a townhome. I've got a big market for it. We can sell it. We're not here to tell you no. We're not the doctors of no. We're okay, but it may be an issue. I'm going to sell it with a home warranty. Perfect. That's the answer we want. Have a good day. A couple other things too that changed when you did it. We will do up to a 2 to even a 3-year term for a fix and flip. But the key component with us is everybody says, well, you charge a little bit more in rate, that's where you're making money. We make money by turning the money. So if you're doing a $30,000 or $40,000 rehab, we're going to give you a 12-month term. If you're doing an $80,000 or $100,000, we're probably going to give you a 12-month term. We're not going to give you 2 or 3 years, because why would it take you that long to do it? Because the longer you have the house, the more problems you have if you're fixing it to sell it. Enterprising little kid comes in the neighborhood and throws a rock through the window. Somebody sees a new HVAC unit and they help themselves to it. Every day it sits out there, there's more of a problem. And another thing that we require is builder's risk insurance with all perils or special coverage endorsement, which basically is a soup to nuts for our borrowers if you have a problem, that you're covered for it. We've had plenty of circumstances where they hit a water line or somebody stole something. And again, we're trying to just make it as seamless as possible, but knowing that sometimes we do have some bumps in the road.
Yeah, good advice. It's just so important, whether it's you or you're working with your investors, have good contractors out there. And to your point, I tell everyone I work with that if I'm working on an investment standpoint or someone inherits a house or something like that, no good comes from vacant homes. Don't let a house sit vacant. It doesn't grow an addition by itself and gain in value. So turn those homes as quickly as possible, I guess, to your point. What Christy says, what is experience?
Yep, sorry, I forgot to get to that. So experience to us are exits. So in the fix and flip business. So you buy a property, and we're looking for it in the last 3 years. We do a little leeway. We can be a little creative, 3 years and 2 months, whatever it is. You bought it, you renovated it, and you refinanced out of it. We're going to give you credit for that. We're going to want to see it, okay? But the easiest one, you bought it, you renovated it, you sold it. That's one experience. You bought another one, did exactly the same thing. That's 2. You bought another, that's 3, and so on and so forth. However, we do have other individuals who buy it, renovate it, and turn it into a rental. That's experience too. And the reason we want 3 years is because if you're not in the game for 3 years, you don't know what the cost of sheetrock is. You don't know how much permitting is, or a BG&E hookup, or whatever utility hookup, and whatever state you're in. So you need to be familiar with the area you're in, and you need to know what the costs are. So if it's rentals, and we can do rental purchases with no experience, It would be, I bought a house. I didn't even do any work to it, but I turned it into a rental. No problem. I bought a house. I lived in it. I bought a new property that I'm living in, and I turned my old house into a rental property. Show me the lease. That's experience. You build a house. That's another thing. And for new construction, which we do a very good job on because it's a good marketplace. There's some new construction around here, but we want at least one build, because building a property from the ground up takes a lot of experience. And we will have individuals say, well, yeah, but my contractor does this all the time. Well, when you and your contractor get into a fight because you didn't pay him what he thought drywall was, and you had already signed an agreement and walks up the job, now who do I have for experience? No one. So you need to be experienced. You have to have at least one build within the last 3 years to do new construction with us.
Yeah. New construction with the supply chain issues and, state of Maryland, it's not for the faint of heart right now. So that's a tall task.
I will say this, but here's something else for you all, which is we do pay referral fees, and we legally pay referral fees. It's not the realtor referral fees, but you are licensed real estate agents, so they're going to have to go through the brokerage. But if you call up and say, hey, I've got a new build in Tennessee, wherever the state is, and we can do the loan, we will pay a $1,000 referral fee.
Awesome.
It's just as simple as that. You make a phone call, you make an introduction. These are commercial notes. That's the difference. These are commercial transactions. So even though the property may be residential in nature, we use the commercial code within whatever state we're in to do a commercial note for business purposes only to an entity. And that's what allows us to be creative.
Awesome.
And
That's
allows
good.
us to take these other monies.
That's good to know. I did not know that. Great. Thank you for that.
Yep.
All right. Kind of to recap, a couple of people were on late. I got a couple of people. So what if you're working with investors, they're gonna probably want your assistance. Not all of them. Some are gonna find their own, but they're looking for people to like kind of bird dog properties, find properties, have access to relationship and resources like Rick and Navigator, having access to private capital like this, knowing the process. So that's just something you're gonna have to invest some time in on yourself to educate yourself on the process. Like Rick said, for different counties, different municipalities have different permitting issues. There's different challenges in different areas of the state. Get in relationship with good contractors. Like Rick said, I'm sure he's got a list of some people he could recommend. We've got some contractors at the office. Make sure you're working with reputable, solid contractors. Like he said, you're going to get what you pay for. The cheapest person is not always going to be the best option with that. If you're going to be in this space, understand what ARV is, after repair value, understand how to formulate that, understand cash on cash returns for buy and hold real estate, know what a 1031 exchange is. If you're going to be having conversations with investors, speak intelligently again within that space. Make sure you have a go-to qualified intermediary for 1031 exchanges. I use Todd Clark upstairs at our title company here at Touchstone. And then, have a good title company too. That's going to work with you on settlements and work with everyone in the process. And we've got some good people. Any questions from anyone? I appreciate everyone, like I said, jumping on. We've got it recorded, but go ahead, Rick.
Three quick things if I could. One, you mentioned Todd. I've known him since 1998. He's done practically all my real estate stuff. He is the most practical, pragmatic attorney I've ever met. He's not about ego. How do we make it work? He does a great job, and Gracie and Jordan who work for him do a great job too. So thumbs up to them. You can use whomever you want, but they do a great job. Couple other quick things for you all. One, when you mentioned the appraisal, we have someone buying a house that's in disrepair, and let's say it's a fix or flip loan. You want to make sure that the after repair value, which is you bought it for 150, you put 50 into it, and you think it's going to be worth 300, that value is real. Now, I'm a licensed broker. So, we have borrowers come to us all the time. They say, my agent says it's going to be worth 320. And I say, great, no problem. We're going to get it appraised. And then they send us comparables, and we're looking at comparables the agent wants the sale, and that might be their opinion of value, but they're not a licensed appraiser. It's in a different school district. It's on well and septic, and all the other ones on sewer. It's across a major thoroughfare. So it's subjective. Let's just put it that way without casting any aspersions. Our appraisers know our product. Scope of work you give us. In this example, you bought it for $150, put $50 into it. Says that what you're doing. That's your borrowers or your visions, your vision for the property. So I'm just doing a quick and dirty. I'm gonna paint, carpet, this and that. So the appraiser looks at it and says, hey, no problem. I mean, Elizabeth's Landing, it's gonna be an easy townhouse, turnaround, middle of the road. This is the value. Or I'm going to use this granite. These are the floors I'm going to put in. So they're looking for comparable sales. They take the time to do the appraisal right. We don't take a dime from them. They get 100% of the appraisal money. So it's not an AMC where they are, getting half or 30%. Our appraisers take the time to get the value. And that value they come in, let's say they appraised it at 300. We use the same appraisal standards that you would for the takeout borrower if you were refinancing or selling it to someone else. So we use quality ratings, we do condition ratings. We're getting at least 3 comparable sales. We're using the same USPAP conditions or regulations as you would have for a normal appraisal. So our values are tight. And when you look at our charts, what we do for valuations, as we track what they sell for and what we appraise them for. We're only about 0.4% off of what we were appraising for, and that tolerance actually goes above that sometimes. So that's a good thing. The other thing I'll leave you with is if you sign up on the website, or your client does, what's one of the biggest things you need? A pre-approval letter to get an offer submitted. You can request proof of funds, which will come out and will go directly to your borrower, or there's a space in there for your borrower to put your name and your email address, and they can make specific proof of funds letters that will come out, and it will say, and let's say the house is $300,000. You don't want a pre-qualification letter from your borrower from ABC Bank saying they have proof for $400,000 when you're trying to buy it for $290, because the seller's going to go, well, they can afford it. I mean, what's it matter? I like everything to be just so. It's kind of our nature in the lending business. So these are free of charge. You put in purchase price $290, street address, and then you hit submit. They put your name in. If you're on a timeline for like a HUD property, anything of that nature comes out, it's specific. And I get calls all day because it's my name on there saying, hi, this is, Sue the realtor. I got a proof of funds letter. And the first thing I ask is, okay, whom do you represent? I represent the seller. Perfect. Okay. I can tell you that Mr. and Mrs. Flipper is qualified for the loan, and here's the street address. And that way it helps you have an upper hand. We've been doing this a long time. A lot of realtors have seen our letters and they know that we fund. So it really helps out. So I'll leave you with that. Proof of funds letters is right online, and everything else. If you have any questions, you can feel free to reach out to us.
Awesome. Well, 2 quick things before we close out. On the traditional sort of fix and flip kind of thing, you guys still operate like a construction loan on a draw schedule? Sort of, is that how that's handed out?
We do, but there is a twist to that too, because we're trying to be as competitive as we can. The other big difference about us with hard money and private money, and this is our own thing, we want to treat everybody like they want to be treated. Experience is key to us. You have 2 to 3 deals. And typically on a fix and flip, if you took out that loan, you bought it for 150, you put 50 into it, you didn't have any experience, so you put 15% down, you have a loan amount for 170. You're paying interest on that full 170. We have the money, the 50,000 waiting for you to use. You're paying interest on that full amount. That's what's known as Dutch interest. If you have experience, we'll do it as non-Dutch, meaning you only pay for the money that you've used at settlement, right? So it lowers your interest costs, lowers your carry costs, and everybody says, well, wow, you guys really are looking out for your borrowers. Aren't you looking just to make money? Well, here's the thing with us, and I'll leave you with 2 things, is if the borrowers see that we're helping them make money, that means we value their business. So if they sell it quicker and they pay less to us, that means they made more money, and that means you look good and we look good and they have more money. And what are they going to do with that more money? They're either going to buy more properties, bigger properties, and they're going to come back to you and us because they know we appreciate their business. The other thing, we do two things, is Greg probably knows this, but on the fix and flip stuff, you know, there's a big thing about you can only have properties on the market for 21 days. Well, that's true unless the property is uninhabitable or is doing major renovations. So the day your buyer buys the property, you can go, and this is a key component that we do, is the buyer, you bring us the buyer, we fund the loan 2 to 3 weeks, we close, but prior to us closing, we would say, Mr. and Mrs. Flipper, we'd like you to have a listing agreement with Mike Noonan. Now that's not groundbreaking because, you know, we want you to get the business and you typically found them the money, they're going to give you the listing. But we like to have it in place because 1, it's in place. 2, it's in place. 3, it's in place. You have it. You've got them on the hook. But you can also say, and we're not going to take credit for this, hey, do you realize I have an appraisal in hand, that house that you just bought for 150 and put 50 into, it's going to be worth 300. I have an appraisal saying it's worth 300. I could start advertising this property for you. And in fact, well, so what about the 21 days you can't do it? No, you put the listing in, and under show instructions, you indicate the property is uninhabitable and or going under major renovations, you're not going to get fined. What does that do for you? Well, there's no inventory. So you have a house that's coming new to the market, you're the point of contact, and you can start marketing the property. And we will help start marketing the property for you too. We'll push it out. We have thousands of people on our list who are looking for properties, and we can syndicate the data and push it out there to the evil Zillow, some Redfins. What does it matter? We're trying to get you out there, Facebook, and it will say coming soon, 123 Main Street. For more information, and we'll say another fine project by, you know, Mr. and Mrs. Flipper. For more information, call Christy Corwick. And you can even push it down the line towards get pre-approved for your lender, who your end lender is going to be, so you can help that. What it leads into is a lead flow generator for you because you're getting calls about a property coming in, you know, 123 Main Street, and you may end up with the buyer for that property, and that's what we hope. But really what you typically get is a lead flow generator for you, for people in that area, puts you in the game and in the conversation. And, you know, maybe you get a buyer agency agreement out of them for another property. But our goal for that flipper is to have a buyer for that house prior to being done. That means you get the sale, you get the listing, and in your ideal circumstance, you get an unrepresented buyer. And I know Greg, as the owner of the brokerage, would love that. I lose you. I stunned you all. Nobody wants to talk to me anymore.
No, his computer just froze. He should be right back.
Okay. Any questions about that?
No, I think that's been amazing information. Again, I appreciate everything. I appreciate you taking the time, Rick. You guys are a great resource. And remember, it's all about, you know, resources and relationships. So Navigator Private Capital is definitely, I can vouch for those guys. And Rick's an amazing resource, stand-up guy, knows that space inside and out. I didn't realize you could do this, but I would totally take Rick up on test driving that system, like he said, because you want to kind of immerse yourself in it so that you understand how the process works for any clients that you might be working with as well, if it's not just for you.
Right. One other thing I would tell you too, because I was a realtor for years. That's where I met Greg at Keller Williams. Is don't be afraid. I mean, it's all about your sphere of influence, and you're running into people, and you may not be licensed in DC, but you have a source for funding now. So if you have someone that says, "Hey, I want to buy in DC," you know, you can obviously find a realtor in DC, and you can get paid referral fees. You know, if you refer them to, you know, a realtor in DC, they can get funding. You can get your referral fee, you know, 15, 20, 25%. It's another way for just picking up the phone and making money because you know we're going to close the deal.
Awesome. Any questions? All right, I appreciate you, Rick. Appreciate you taking the time.
No problem.
Yeah,
Thank you
Rick,
very much
thanks
for
a
the
lot. This
opportunity.
was great. Yeah.
You're welcome.
I'll
Have a
send-
great
Appreciate
evening. Bye-bye.
Thank you.
Thanks, guys. I'll send out a recap email with all the info. Take care, guys. Appreciate it very much.
Thanks, Greg.
Thanks a lot. Bye.